Good afternoon, traders. This is Christian from Hertz Tribeca Trade Group with your end of day recap for Thursday. And so we got one more day of the trading week to go. And S&P futures down 14 basis points. We really haven't gone anywhere all week long in the major indices. It's kind of been, I don't want to call it a chop fest because there have been some names that have moved. There's definitely been some opportunities in the market to trade back and forth this week. It does seem like, however, midday the indices were moving up and they kind of gave it all back there at the end of the day. Looking at the 1 hour kind of is a little bit more revealing. This was something that we pointed out on Monday. And then on Tuesday, we try to break higher. We did spend some time, I think, was this from last night's close to half the day today above value for the week, but it's kind of funny because we're basically right back to where we started pre-open on Monday morning, and sometimes this happens after a big run. So what does this look like on the daily chart? We're basically just riding this yellow line, this 5 period moving average up here. And you kind of feel like at some point, I don't know. Again, I'm not trying to predict this, but it just seems like we're due for, it's kind of been this week a little bit of, I don't want to say, I'm using this phrase a lot, death by a thousand cuts. I just think that it's inevitable that we get one day coming where we get a little bit of volatility and then probably we bounce back. But this kind of just sitting above the 5 period moving average, I don't know, maybe it's something with earnings that catches us and has us go lower. We also have Trump speaking tomorrow at 12:45, making an announcement about the Iran deal. You also have North Korea saying that they've got a small earthquake, which we know what that means. So none of those things really impacted the market a little bit, other than kind of just bringing us down from the highs. You could see we actually went from the top of value area to the bottom of value area, and we broke down, but managed to save it. So back inside value and back where we started for the day. I'm going to tell you. I'm going to give you a couple things, just maybe a little bit of hints. SMH, the semiconductor ETF. I'm going to just turn to the technicals in this for a minute. And I was just kind of drawing this and putting this on Twitter. But one thing I've been noticing for like the last day for the last 5 days is they've been buying a lot of SMH puts. Now, this typically happens once we get a little bit overbought. I don't know if they're buying puts outright or if they're just hedging maybe a technology or a semiconductor portfolio. But so this has been going up. You could actually see if I bring up the 5 days of activity. You could see, I mean, last was it Wednesday, which is yesterday, they bought 16,000 of those November 92 puts. Last week they bought 10,000 of them. So I mean, look at this, put, and again, SMH is used more as a hedging vehicle usually in the option market and as well for hedge funds, but it's a little bit more puts than normal. So let's just look at the technicals now. Notice that we're overbought, right? The RSI is a 75, right? And if you're not familiar with the RSI, but it's a relative strength index, it kind of gives a good pulse as to whether either a stock, index, ETF, sector, whatever, what have you, gets overbought. Now, in stocks, they could stay overbought for a long time, but usually sectors, they don't stay overbought for long. Take a look at the history of every time SMH has gotten a little bit overbought. Here it got a little bit overbought. We have a big red candle. Here it got overbought. The RSI was about a 76. Look at what happened thereafter. Again, I mean, these are all like blips in the trend. But if you're caught with a lot of a heavy portfolio of semiconductors, or you're buying at the wrong time, it could be a little bit painful for in the short term. Here you could see this is probably the most overbought we got, which is kind of right where we are now. It's a 78. That was a 78 RSI. And you could probably, I would think that if you've been trading this year, you remember this day. They got smoked this one day, and I think this was like down like 2.5% down day in semis, and then they kind of whipped around here for a couple of days, and then they went lower. They broke the 50-day moving average and then reclaimed it. Now again, it in the long term, if you're a long-term holder, you don't really have to make that many adjustments. Because we were, even at this point when we were overbought, we were in 88. The price was 88, and we're at a 96. So, if you're a long-term holder, you don't really care about this stuff that much. But if you're sitting with a lot of option positions that are expiring in a month to 3 months out, it's going to hurt if this kind of comes in and has another one of these big red candles. So again, I'm not predicting that. I'm just kind of looking at some of these things that have happened in the past and looking how again, these are logical things. Whenever the the moving average, the yellow moving average, the 5 gets way above the 20, usually at some point it comes back and they come in and the price meets up, and the two moving averages come, squeeze a little bit. Sorry, I can't speak today. I guess maybe it's getting towards the end of the week, and I'm getting a little bit tired, but it is what it is. So be careful. This semi group has been an awesome group, but you just want to be mindful of when things get a little bit overbought. And then, of course, to analyze things on an individual stock basis, right? Every name is a little bit is different, right? Not every name is overbought. Just some names. I think you want to be careful of that. There was a name that this is a bit of a one-off name. I don't think this is going to bring the. I don't know. Maybe we get a little bit of volatility tomorrow, but this name is, the management is, I would say, less than stellar. I mean, remember this AAOI, they've guided up previously, and then the last time they reported earnings, they had horrible numbers, and now they're pre-announcing lower than expected numbers after the close today. So I don't think this name is open. Again, it's not a big name in the semiconductor space, and I think I think this management team doesn't know what they're doing, and they're probably going to get into big trouble. You can't pre-announce strong numbers like they did last quarter and then have a horrible quarter once the numbers come out. So they're a bit of a one-off, but maybe that might cause a little bit of volatility tomorrow. They're halted right now. Okay, so that's that group, and I'm sorry I spent a little bit more time on that, but it's something to take note of. Another group that has been very strong. I love this ETF. This is the IGV ETF. This is not overbought yet. So this is tech and software. Take a look at the names that are in this ETF. I've made reference to this ETF a couple times now. It's not on a lot of people's radars, but if you look at the movers for the day, Microsoft is the biggest weight. Salesforce is in here, but there's a lot of names that are really strong. Red Hat has been an absolute beast. ATVI had a nice day today after getting downgraded a couple days ago. But you could see if you look at all the names in here, this group has just been very, very strong. And you can kind of look at a few of these and just see. And SNPS has been another one that's been pretty strong. So, a different tech group that has been leading the way. So it's not. And I think this is good for illustration purposes, because I know, like, on CNBC they like to have the argument of, like, the fangs, or the fang stocks, Facebook, Netflix, Amazon, and Google carrying all the weight, but it's really not. It's really a lot of these. I don't want to call them second tier companies, but obviously Microsoft is the biggest weight, but your Salesforce and so forth, and they're also doing extremely well in that group. So you got a couple things going on here. You got one group that's moving up, and we're still seeing some call buying in that group. Which kind of leads me to, what did we see today? We saw some Snap call buying. We saw AMD call buying today. We saw Twitter call buying. Those are probably three of the best trades of this morning. And Applied Materials, they keep coming after Applied Materials, very similar to Micron. But they keep coming after that name. Speaking of Microsoft, there was a little bit of Microsoft calls. And then this afternoon was kind of like spotty in terms of option activity. It was a little bit different. There was some FedEx calls which worked pretty well in the room. There was a little bit of another group that's showing a little bit of strength, and I don't really have a reason for it, but it seems to be turning the corner. This is Zoetis. This is a name more in animal healthcare, as well as IDXX. Take a look at this name. This did this a couple weeks ago and then stalled out. Maybe this time it gets going. And then just to kind of look at, so that group was so we saw small call buyer in that one. GBT, which is a name that looks like it's trying to break out here. Global Blood Therapeutics. This is another speculative biotech company, but has broken out of this little range here. So nice aggressive call buyer going out to March in that one. And then there was on the put side, I've mentioned the SMH. There was QID, which is the opposite of the Qs, leveraged, I think. QID. I think this is either 2 times short the Qs. So there was some calls in that, so which is a bullish play. Yeah, 2 times the inverse of Qs. So when you have to kind of get your mind around this, but when you're buying calls in something that's inverse, you're essentially just buying Qs in the puts. I don't know why they just don't buy puts in the Qs. Maybe they can't buy puts, but instead they buy calls in QID. Really weird. Again, I don't unless somebody's doing something else, volatility type play. Don't really know why they're doing that type of trade, but it is what it is. What else do we see? SYY, a little bit of soda calls at the end of the day. So some different things that we saw towards the end of the day, and also another group that looks it's all over the place. Some groups are again breaking out. Some are breaking down. Look at Nike. Nike actually did have a hammer. It looks like a hammer bar, and kind of holding by a thread support. But look at Dick's Sporting Goods. My goodness, this just took out this level yesterday, and we saw pretty aggressive. You could see MACD bearish crossover, and you could see you've got some levels down here that you could basically use as targets. But they went after Dick's Sporting Goods pretty aggressively. A couple, not a huge order, but November 23 puts twice they came in for those. So some things opening up, that you could play to the downside if you like. GPS, there's some weekly Gap stores puts. I'm not sure if they're still reporting monthly numbers. I don't see them. Usually they report once a month what their same store sales are, but and they break it down between what Old Navy and Banana Republic, but I don't see them on the calendar. Usually when we see puts or calls that are weekly, it's usually because of their monthly numbers. But I looked on on the Bloomberg calendar and I don't see them coming up. So I'm wondering what those puts are related to, but maybe we'll find out. So that's it for today's recap. What else? XRT is another area, which is also kind of right in the wheelhouse of DKS. But I think we talked about this yesterday, how it failed at the 200-day moving average, and another big down day. Now it finished off the lows, but some of these retail companies have really gotten smoked over the last week. This retail ETF has gone from 41.50 down to 39.88, and we did see this was about a week or week and a half ago. We saw a big block of XRT puts that look bought. There was this too. This was on 9/28. There's 48,000 of those, but I think this is the order that I'm referring to. This was on. Well, it says yesterday, but let's see if I could track this down. Top sweeps. Oh, no, not coming up. Maybe it was just a big block trade, but you could see a lot of puts going up in the XRT ETF. Also, the Chinese internet names were a little bit weak today. The KWeb ETF was down about 75 basis points. A couple names in there, JD, Baba, were weak. Defense names were strong. They continue to break out. GD, NOC. These names. I mean, look at NOC today. Really, really nice. LMT. So again, maybe that's because of Trump speaking tomorrow, but big updates in those groups. And that's it. Gold and bonds. Gold was up just a little bit today. Transports were up 70 basis points, and bonds were also up about 40 basis points. I talked about how I wasn't going to play, and I'm not playing any of the banks for earnings. I personally think that they got way ahead of themselves. My quick spiel on this, which I've said a couple times now, is, I used to work at a bank for a long time. There was a number of really good years when I worked at a bank, most of them prior to the financial crisis. But I have a lot of colleagues that are still in there, and they're not having a party. The morale is not good at these banks. So, are they cheap? Do they deserve a little bit of a rally? Perhaps, but I don't see anybody kind of who's working for a bank that I know that is like celebrating and having, getting a great bonus and loving life. So that should tell you now. Not to say that could be that they're just not, they're not being rewarded and the bank is taking profits. But I think what came out in the numbers today in J.P. Morgan and Citigroup is that they're not, the trading revenues are not nearly what they used to be, and it doesn't seem like they're going to come back. Again, that's just my opinion for you, a little bit of insight. But you look at the FIC numbers and you look at the equity trading numbers, and both banks missed. So it becomes, where are they going to make their money? They're going to need rates to really skyrocket higher, I think. And they're going to need a lot of rate hikes. If they don't get that, I don't see the banks being a great place to really be unless that happens. We are getting a lot more IPOs that come out, so maybe they'll make some more money investment through the investment banking relationships. But as far as trading goes, it seems to me that's going by. That's not going to get better unless we get the other thing is maybe we get a huge spike in volatility. Maybe that will help. All right, so I'll leave it there for the night. Have a great evening, and I'll see you back in the trading room Friday morning.